Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, give us a like, subscribe, let YouTube's algorithm know. My guest is Helene Li, co-founder and CEO of GoImpact Capital Partners, an advisory and investment group focused on sustainability in finance. I spoke with Helene about the big picture of where ESG is with financial institutions and fintech in Asia and what to expect this year. Helene Li, welcome to DigFin VOX.
Thank you, Jane. Good to be here.
So this is our first DigFin VOX of 2023. So welcome and ushering in the new year with you.
Wonderful to be here. I'm very honored to be one of your first guests.
Well, I'm interested in speaking with you about GoImpact and about ESG, and particularly around fintech applications for ESG in the region. This is, I think, going to be sustainable investing and sustainable finance are going to be major evergreen themes for the rest of our careers. You've been trying to pioneer a lot of work in ESG research, and I think a little bit of investing too, if I understand correctly. So why don't we start with big picture, kind of the state of finance and ESG in Asia right now. Where do you see the most promising action taking place?
Right. That's a fantastic question and something that I can give a long and a short answer. But the short answer really is that people are moving from the talk to the walk. Okay. But that is proven to be a little bit more challenging. People are more and more seeing there is a green premium versus a brown discount. But how do you actually build initiatives or build product offerings that gives you the green premium, or look at investments that give you the green premium? And how do you distinguish among all the greenwashing, brown spinning, and all these other colorful things that we come across to avoid the brown discount? That is easier said than done, and something that, education, learning, which, GoImpact does, plus a lot of other initiatives that government policymakers, as well as corporates, and even down to the individual level are doing. Yeah, so that's the longer hand answer.
Asia, where the region in which we live, is made up of very distinct and varied markets and countries and business cultures. You're in Singapore, I'm in Hong Kong. What is the role of these two financial hubs in advancing ESG finance and related tech?
Well, both are clearly very important hubs in Asia Pacific in driving the agenda. But I do think that they approach it in slightly different manners. No two locations are exactly the same. They have different strengths, different weaknesses. Singapore obviously looks at the whole ASEAN, Southeast Asian market. Hong Kong has got China, on the back as the backdrop. But I think one thing in common that ties the two together are government interventions, if you like, to build a talent pipeline. Okay, there is a real crunch for green talent. And I think both locations, both jurisdictions are really looking into how can the public and the private sectors work together to bring that talent pipeline for green jobs or greener jobs that much closer. And the second thing is, of course, in terms of finance, right? I mean, Hong Kong is obviously, the leader in terms of raising funds in the capital markets through the Hong Kong Exchange and all that. But there's a whole range of other finance-related initiatives like fintech that you just mentioned as well, in which there's a very vibrant landscape in Singapore, working on different solutions, whether it be climate tech, waste management, plant-based food, and others. So it's an exciting space in which both jurisdictions are really very active in.
The sense I get, and this is more just my own data points and anecdotes rather than any systemic research, or so maybe I'm hoping you can confirm or amend my observation, is that Hong Kong has, we've got the exchange here, which is a dynamo, of course, and very large, deep capital markets. and we've got China. So in terms of green bond issuance and listing those and that kind of thing, there's a huge marketplace here. Singapore's always had a much smaller capital market. So just in, even if it's 1 for 1 in terms of the size of their green finance versus their traditional market, and the one in Hong Kong, of course, the Hong Kong one will be much bigger. Yet in Singapore, and again, this could be just coincidence, I've interviewed quite a few companies that are doing a lot of Web3 based, blockchain based, carbon trading, and some of the newer aspects of not traditional capital markets, but rather, maybe on the fintech side of things. And I seem to bump into a lot of those in Singapore, often with MAS implicit or explicit backing. So is that correct? I mean, are we seeing basically traditional capital markets being put to use in Hong Kong, and Singapore is the more fintech or cutting edge solution side? Is that a fair observation?
I think it's a fair observation up to a point, Jane, because obviously Hong Kong rides on the success of its, being one of the top 5, capital markets in the world. So that's an obvious strength. And for financial institutions, for the traditional FIs, whether it be green bonds issuance or other investment vehicles, obviously Hong Kong has an edge because of its very mature and developed, capital markets. Singapore is very much, there's a lot of policies that gives incentives for fintechs to work together. And not just in terms of finance, but in terms of the whole ecosystem support, helping them to go to market and all that. And the Monetary Authority in Singapore obviously plays a very active role, as we can tell from not just the Singapore FinTech Festival, but also the green shoots and the green fintech, events that they run regularly. I would say is true. And also the fact that they are building very actively the carbon trading exchange, in Singapore, Impact X, and also the Project Greenprint, which is basically, aggregating a platform that aggregates ESG data, which has always been a pain point for investors. So I think you see all this being very visible in Singapore. And I think hence that observation is really fair to a point. But having said that, I think both jurisdictions, both Hong Kong and Singapore, are very much moving in the same direction in that they want to attract some of the best, green fintech companies to come and land in the jurisdiction and play into different markets. Singapore, obviously, more the Southeast Asian, Hong Kong, obviously the GBA and Greater China, and there's a huge demand and huge market for climate tech and green in China. So I think both are doing similar things, but with different market in mind.
What you touched on the green prints that the MAS has been behind, and this issue of data and standardization. One of the big problems with ESG worldwide has been lack of global standards. Huge fragmentation in this area. So it makes it difficult for investors, asset managers, risk managers to kind of know which benchmarks to use or to agree on what things mean. Do you see any changes, and do you see in Asia a growing movement towards coalescing around certain standards, or is it going to remain fragmented?
You are spot on, Jane. And I think there are global, not just Asian, movements to try to harmonize the metrics. There should be some harmonized metrics globally so that investors and really, fund managers can work on it more effectively. If you look at it, there are different frameworks which can be applied. The most commonly used one for the exchanges, of course, TCFD, the Task Force for Climate Risk Disclosure, put forward by the United Nations. There's also the Global Reporting Initiative, GRI. But all these have different perspectives that come into play when it comes to reporting and disclosure. And it's almost challenging for companies to decide on the right framework for their industry sector without a harmonized set of metrics. So I'm very glad to say that the ISSB, the International Sustainability Standards Board, which is being driven by the global, audit body, which is the, the International Financial, the Accounting Standards Board, which makes sense because for financial reporting standards and audit standards board to come in and try to harmonize based on the existing set of parameters, a globally, integrated, if you like, set of metrics, that would go a long way to help. Now, it's still work in progress. It was just announced at COP26, which was like 2 years ago at Glasgow, and they recently, put forward, a framework riding on the other frameworks that I just mentioned. But I would say watch this space very closely because the ISSB, I think, is better positioned than most to put together the harmonized metric that the sector has been really waiting for.
Okay. So that is, I guess, tentatively good news for the industry to get some clarity around what they need to do and what reporting needs to be done and what that looks like.
Correct. It's work in progress, but it's definitely a move in the right direction, I would say.
What does that mean then for the kinds of investments that financial institutions should be making into their systems, into their capabilities and their talent? What are the skill sets that banks and asset managers and as well as, I guess, listed companies and corporates are looking for?
Right. If I can just unpack that question into 3 layers.
Okay.
First at the board and leadership level, okay, at the board and C-suite level, there is probably a different set of, learning and use cases that you need to enable the board directors and the C-suites to understand how that is important for the business. And, what are some of the risks they need to mitigate? What are some of the opportunities they need to capitalize on? So that's one set. And then that should cascade onto the managers and the more broadly, the staff level, that in order to equip the different business functions to be all, moving in the same direction, so that, ESG or sustainability is not just the business of the chief sustainability officer. Okay, it is, it makes sense for different business functions to be on the bandwagon at the same time. So that requires another different set of learning. So that's more for all the staff. And last but not least, I think it's also the advocacy towards the third-party stakeholders that the company might have. It's not just putting out a report at the end of the year, because the Hong Kong Stock Exchange or the SGX, the Singapore Exchange, requires you as a listco to do that. It's also about communicating with your clients, with your service providers, with your vendors, and the third-party stakeholders at large. What are your initiatives and how you would like to work together with them, on that. So those are really the 3 important layers in which learning can take place. And yeah.
So you're reminding me of something I heard from someone else recently, and I forget who it was who made this observation. So it's not my original one, but I think it's a good one. And you were previously the general manager of the Hong Kong Fintech Association, as well as coming from finance. So I think you'll have an appreciation of this, which is that ESG or sustainable investing today and the hiring and the transformation that has to happen is very similar to, let's say, 5 or 6 years ago when firms were looking to go digital or try to understand that. So, the first step was let's hire a digital officer, and then or set up a lab, right? And then the rest of the organization was oblivious or hostile to this whole thing, right? And then gradually, or maybe not gradually, maybe quickly, because of competitive pressures from the fintech sector, banks and other institutions began to move more aggressively. And then, of course, we've seen some of these institutions like DBS and UOB and so on become a lot more sophisticated with their digital capabilities. Do you see something like that happening with green or ESG? Are we going to see the same thing, or are there going to be some tweaks here?
Yes and no. Okay. Before, in my banking days, which was right in the era of digital transformation, that was the buzzword. I used to say that don't just put digital lipsticks on. It's not going to work. You need to have it, ground up, bottom up as well as top down. Now, people are putting green lipsticks, for lack of a better word, although that won't look very nice on. But I think the pressure is slightly different. It's with the digital wave, it was more the fintechs who are trying to, take the breakfast or lunch of the FIs. Here is the policymakers, the regulators who are pushing it. And, with the COP27 and upcoming COP28 really around the corner, you're looking at a serious sense of urgency of the agenda, which the digital agenda didn't have, apart from market competition. So I do think that this is going to move a lot faster. But for it to move faster, people need to realize that the skills framework is going to be very important. There are different skill sets, both generalist skill sets, as well as specialist skill sets in terms of like carbon accounting, the measurements of your carbon emission, that are very specific. And also the CSO, the Chief Sustainability Officer, that need to be a strategic thinking generalist kind of job that knows the latest, trends and the lay of land in the development of the space. So there are different, various, very different and diverse skill sets that you need to equip people with.
In some of these spaces, firms are also grappling with, you mentioned accounting. So in the carbon offset market, right, the voluntary carbon markets, essentially people investing in projects or in perhaps in companies, how you turn that into something that fits onto a CFO's balance sheet, I believe has been tricky. Do you see any change there? And what's making it possible to better integrate ESG or green assets or liabilities or intangibles into something that people can measure and fit more easily?
I think the whole, carbon exchange has been really the huge challenge there is, of course, the discrepancy in carbon pricing globally. As we know, there has been a huge difference between the most expensive and the cheapest countries for carbon pricing. And that leaves a lot of problems in terms of, arbitrage and all that.
And
so
can I just understand that dynamic a little bit? So a carbon price in, say, a rainforest-rich country like Indonesia would be very different than in, I don't know, South Korea, for example. I don't know. I'm just trying to pull names or pull something out of my hat here. Is that what we're talking about? Like that those countries that basically have carbon credit assets have a different pricing mechanism, just like Saudi Arabia for oil has a different way of looking at that asset versus a non-oil producer?
Yeah, that is one dimension that drives the price, but there are also other dimensions that are sort of political, tied to the economics of the specific country. For instance, Sweden has one of the highest carbon pricing, and obviously the reason for that, Sweden is a wealthy country with a very small population. It's got a very stable economy, and so there are all these other factors that comes in to that. And Sweden and the Nordic countries have been doing quite well in terms of their own greening of their environment and initiatives. So the demand for carbon would probably be very different from a country like, say, Indonesia or other countries. So there are various factors driving the carbon pricing, but that huge discrepancy obviously makes it very challenging for carbon exchange to work effectively and transparently. The other thing about it is people look at this as like one of the hottest things to get into, but we must put it into perspective that this is only one of the solutions. This is not the silver bullet that is going to, suddenly, we are going to stop, global warming because of this. Let's look at it, at the emissions, unless we significantly cut that, is still going to be there, whether you have offsets. There's no net positive if all you do is offsetting.
Right.
So offsetting is one of the solutions, but it's not the only one. And I think we probably need more ammunition in the toolkit in order to tackle these, urgent problems.
What's the single biggest change that could make a real difference?
Again, this could be my personal opinion, but I think it takes a lot of small baby steps to make the change. Instead of focusing just on one giant leap, which will be very painful for the economy, for the companies, focus on concrete baby steps. If we all take collectively across sectors, that's going to make a huge difference. So
Do we have time? Does the next generation have time if we're just thinking baby steps?
We never have time. We wake up to this quite late, I would say, but we are actually the first generation to wake up to it, but probably the last that can do something, to halt the problem and to prevent it from being like, simple disaster for the generations after us. But I do believe that all the baby steps added together would make giant steps. Little baby steps could include, individual habits. It could include corporate mindsets in terms of, the way they do business, the way they look at embodied carbon, for instance, and the way they look at it, that we're all in it together. Let's face it, the scope 1, scope 2, scope 3 of carbon. In scope 3, your carbon is my carbon, okay, upstream and downstream in the whole value chain. No one operates on an island of its own. So, yours is mine and is his. So the more we can work together, the better.
Do you see financial institutions taking that scope 3 seriously in the way they account for financial or other or credit risk?
Right now, I think there is move in that direction, because I'm pretty sure that the regulatory push for scope 3 disclosure will be coming soon. Okay, it's not there yet, but once it comes, it's gonna just hit all of us like that. And I think everybody is gearing up towards that. And people are seeing the brown discount. If you continue to try and hide away from that and be very incomplete or biased in your disclosure, it's all going to come back and bite you at some point in time. Your investors, the fund managers. So it affects your access to capital. It affects your access to talent.
Well, this is a DigFin chat, so let's talk a little bit about the tech side and the fintech side. What do you think? When I talk to people in this space, it tends to be either people in the data space, or it tends to be people in the blockchain space, and that tends to be on the more bleeding edge. I don't know how really important some of the, because you already mentioned that we can only go so far with carbon offsets. That's just where a lot of the blockchain stuff is. But nonetheless, the idea of provenance is very interesting. What do you see going on? Am I missing anything? And what could make an impact from a tech or a fintech perspective?
I think tech is a huge accelerator. It also provides a wonderful toolkit, a toolbox for people to use in order to move the agenda faster. Because as you said, time is our common enemy, right? Is the biggest enemy for this agenda. And with a lot of AI, big data, data analytics, you can actually hone in on the specifics of GHG emissions and others and manage it better. So I do see that that will be a very useful way in which tech can be an enabler and an accelerator. But apart from that, I think it's also tech can also be used as for the younger generation at university level or the graduate study level. There can be more work streams, more a specific degree giving or postgraduate studies in environmental science that I'm seeing that would really help the agenda as well, because the more talents we have being trained in that, the better chance we have, the more ammunition we have to fight this collectively.
If you were going to be, if you were an entrepreneur looking to set something up in this space, or perhaps as an allocator looking to invest in startups, where would you think there's the greatest opportunity?
I would say AI and data analytics. Probably the combine of the two. You need all the satellite data and others, and you need the analytical tools to be able to do it very quickly and very efficiently. So a lot of deep learn, a lot of other AI tools together with the data, I think would be really essential.
Are we seeing success stories? Because these also need to be, these companies need to make money if they're going to be able to provide these solutions long term.
I think there are various people, drumming up interest on different fronts. There are, various fintech that we've come across, both in North America, in the Nordics, as well as in Asia. But I haven't, but not an outright success story, as such that comes to mind. Maybe it's still a little bit early days.
What are the specific skill sets that people can bring to this story? Or if someone's interested in, maybe refashioning their career to be doing stuff in ESG or ESG fintech, what are the viable skill sets or experiences that they can bring to the table?
I think in terms of experience, they can come from different, functions in their previous career. Obviously, it helps if they have been in two major areas like communication. If they are a strong communicator, they can be a good advocate for the agenda. Or if they come with a finance and engineering background, it also obviously have essential skill sets that they can bring to the table. The interesting question about that career transition, that is something that we're working very closely both in Singapore and Hong Kong, on. There's a whole career transition program towards greener jobs that we have mapped out. And the whole framework is really built around two streams, the generalist stream and the specialist stream. And under the generalist stream, it will include things like not just a, baseline understanding of what sustainability, E, S, and G can mean, but also reporting disclosure, what are the latest, supply chain that hits every industry. What would decarbonization of supply chain mean? And on the specialist, it would be carbon management, carbon accounting, and other specialized topics. So there are, our firm has been involved in building a series of these career transition programs that help companies to actually, have homegrown talent that can be, future ready, I would say, for this. Although, they might not, have a degree in environmental science.
Yeah. So you're co-founder of GoImpact, Helene. What do you think we'll be able to look back a year from now and see that your firm was able to accomplish?
I would say more of these programs being rolled out, but also more importantly, I think the work of everyone in the space is really to make our, what we are currently working on redundant, in the sense that if you work in sustainable investments or sustainable finance, ultimately you would like to see that sustainable finance as the term is redundant, right? That every form of investment would take into account sustainability and ESG. So that would be the ultimate aim.
Great. And that's obviously a long-term, ongoing, continuous process of transformation at the industry level. Any milestones in either Hong Kong, Singapore, or elsewhere that we should look out for that would give us encouragement that the industry is making good progress?
Well, I think there are a couple of things. First of all, obviously, in terms of the overall ability of the different jurisdictions to attract green capital, in there is one of the KPIs. Another one is, of course, the ability to fill green jobs, which means that the talent pipeline is healthy, and then you have people that have the skill set that are ready to move along, to contribute to the agenda much faster.
Okay, so that's what we should be looking for, the way in terms of being able to measure success: capital, people.
I would say those are the two things, and of course, tech. Let's not forget, tech is something that really gels all these together, the huge accelerator that will make things move faster.
Yeah, I might tweak that, just say it's obviously we need enablers of innovation to raise productivity and really hammer home results, so that this isn't just a compliance tick the box exercise, but actually something that becomes super useful to financial institutions and hopefully something that guides them to perform well.
Yes, 100%, Jane. Totally agree.
Great. Well, on that note, Helene, I want to wish you and our audience a happy 2023, and a little bit early, but I guess we could also say, good year of the rabbit coming up. So wish everybody a happy new year. Thank you for joining me on DigFin VOX, Helene Li.
Thank you so much, Jane.